What's up, traders? Welcome back to the OTE FX Master Course by FX Don. This is Module 1, Lesson 2, and in this lesson, we're breaking down the real truth behind how money is actually made in Forex. If buying and selling still confuses you, if you're not sure why people say you can make money when price goes up or down, this video is going to clear everything up. By the end of this lesson, you'll understand exactly how traders make money and why execution matters more than prediction. Let's get into it. Biggest misconception? One of the biggest misunderstandings beginners have is this. If price goes up, I make money. If price goes down, I lose money. And honestly, that sounds logical, but it's completely wrong in Forex. In Forex, you can profit whether price goes up or whether price goes down. It all depends on how you enter the market. How you actually make money? In Forex, you make money by capturing pip movement, not by guessing and not by hoping. Whenever price moves 10 pips, 20 pips, 100 pips, the movement is multiplied by your lot size. This creates profit or loss. So Forex is not guessing direction, it's about aligning with structure, timing, and risk. What it means to buy or go long? When you hit buy, you are saying, I believe this currency pair is going to rise in value. Let's take Euro USD for example. If you buy Euro USD, you are expecting the Euro to strengthen against the US dollar. Simple, clean logic. If price rises, you make money. Long trade profit logic. Here's a basic example. You buy Euro USD at 1.1, price rises to 1.1050. That's plus 50 pips. If your lot size is correct, the 50 pip move equals your profit. This is long trading, your profit from upward movement. What it means to sell or go short? Now here's where beginners get confused. When you click sell, you are not doing anything weird or illegal. Your broker automatically handles the borrowing behind the scenes. A sell trade simply means I believe price is going to fall. Short trade profit logic. Example, you sell GBP USD at 1.3, price falls to 1.2950. That's plus 50 pips of profit. You didn't need price to rise, you profited from decline. This is why Forex is so powerful. You trade relative strength. Another key point most beginners don't realize. You never trade one currency alone. You are always trading the strength of one currency versus the weakness of another. For example, USD might be strong against JPY today, but weak against Euro at the exact same time. That's because Forex is all about relative movement. Why price moves after entry? Once you enter a trade, price will move because new buyers enter, new sellers enter, institutions rebalance liquidity, news drops, session open, market shift sentiment. Nothing magical is happening, it's just order flow and liquidity. 3 possible outcomes. After you enter a trade, there are only 3 possible outcomes. Price moves into profit, price moves into loss, price goes sideways. That's it. There's no other outcome. Knowing this keeps you calm, logical, and realistic. Direction equals profit. Being right about direction does not guarantee profit. This is one of the hardest truths beginners learn. You can go long, be right about the trend, but if your entry is bad, your lot size is wrong, or your stop loss is emotional, you still lose money. Market states. The market only exists in 3 states. Uptrend, higher highs and higher lows. Downtrend, lower highs and lower lows. And range, equal highs and equal lows. Your goal is to identify the state, not guess randomly. Trend logic. In an uptrend, you want to buy into strength. In a downtrend, you want to sell into weakness. In a range, you need discipline and caution. Price structure tells you what the market wants. Trader's real job, your job, is not to be a perfect predictor. Your job is to identify direction, enter with logic, manage risk, use proper stop losses, protect yourself from emotional decisions. Trading is a skill, not a gamble. Lesson summary. Let's wrap this up. In Forex, you can make money when price goes up. You can make money when price goes down. You trade relative strength. Direction without execution means nothing. There are only 3 market states. Survival and precision beat guessing. The lesson builds the logic you need before learning pips, lots, leverage, and real entries. In the next lesson, we break down currency pairs, pips, lot sizes, and leverage. And I promise you, after that lesson, all the confusion around money and Forex will disappear. Before you go, drop a like, subscribe, and comment. OTE FX. So I know you're following this journey. This is FX Don. See you in lesson 3.